Hi everyone, welcome back to the channel. This is going to be a continuation of the last video where I talked about Biogen potentially being a great company trading at an undervalued price. So go ahead and check out my last video first where I showed how I found it using the magic formula screener, and in this video I'm going to build upon that and dive deeper into this company to see if there really is an opportunity with this stock. So Biogen is a drug manufacturer. They're a pharmaceutical company and they are focused on developing medicines for a number of conditions, mostly neurological conditions. And one of the big things they're targeting right now is Alzheimer's, where it's right on the front page, driven by our commitment to patients and passion for neuroscience. Biogen remains focused on furthering Alzheimer's disease research and treatment. So let's get right into it. The first thing we're going to do is take a look at Biogen's latest annual report. This is the 2019 annual report. So here are the drugs that Biogen makes the majority of their revenue from. It is a relatively concentrated group with one drug making up almost 40% of the total revenues and 5 making up over 90%. So this company basically has 5 big drugs that are bringing in the vast majority of this company's revenue. But if you look at the growth, it has been outstanding. So we see over the past 5 years, consistent revenue growth, earnings per share growth consistently growing, and the same with free cash flow. So this company has been growing very rapidly over the past 5 years in every major category. Another encouraging sign about them is that their revenue sources are diversifying outside of the country, where in 2017, 68% of revenues were in the US, but in 2019, it was only 59%. So I see this as a good thing. Diversifying outside of the US, bringing in more revenue from other parts of the world is a good thing. So here is the CEO letter, and I'll put a link to this annual report down in the description if you want to check out the whole thing. But the main point of this letter is talking about the purpose of the company and what their vision is going forward. So this is their purpose. They pioneer science with the goal of better understanding and preserving the underlying qualities of essential human nature. So going forward, this is really the direction the company wants to go, where they maintain the resilience of their core business, which are those 5 drugs that make up almost 90% of the revenue of this company. And then they're moving towards creating new sources of value, where they're super focused on developing a drug to treat Alzheimer's and other neurological conditions. And a big factor with drug manufacturers, and something that I don't really like, is that most of these drugs have patents for a limited period of time, and then after that the patents end and any other company can come in and start making generic versions of these drugs. And so that's why I'm not really a huge fan of pharmaceutical companies, because they have to keep spending billions of dollars in research and development to be able to keep creating new drugs, to have a pipeline of money coming in. Where if you don't put a bunch of time and energy into developing new drugs, the ones you have, the patents will eventually run out, and over time the revenue is going to dry up from those sources. So that is something to keep in mind. It looks like this company has a strong moat for now, where they have seen huge success with the drugs they've manufactured in the past, but there is no guarantee that that will continue into the future. And so this is really their long-term view, where they already have drugs for multiple sclerosis, and then into this decade they're really focusing on honing into Alzheimer's, stroke, and lupus, and over the super long term moving to neurology, movement disorders, and neurocognitive disorders. So it looks like this company is taking what they have, which is their MS drug, and really just focusing on building on that and tackling new diseases every few years. In this letter, they state they're the market leader in MS with 34% market share of the 1 million patients being treated. So this is really their moat right there, where they have the majority of market share for a condition that is fairly common. Now we'll jump right over to the Rule 1 toolbox to see what kind of history they have, and as I talked about in the last video, the growth of this company over the past 10 years has been fantastic, where every single growth number you can look at is pretty much perfect. This company doesn't pay a dividend, so you have the book value growing at almost 8% a year, earnings per share growth 20%, same with cash flow, and then sales growth at 12%. And two of the most important numbers I like to look at, return on equity and return on invested capital, which I touched on in the last video, those have stayed very consistent, and like I showed you in my last video, have actually been increasing in the past 3 or 4 years compared to where it was 5 years ago. They're also very conservative on debt, where they can pay off all their debt with less than 1 year's earnings. So overall, this company is very well run. And again, it's just a question of will they continue to have the same success with new drugs as they've had in the past. So now we're on Guru Focus, and we can get into more of the fundamentals and how this company has been performing, and then start to dig into the valuation and what this company is really worth. So obviously a very well-run company where you have return on equity, return on assets, and net profit margin is 40% right now, and that is among the best in this industry. We also can come down to the valuation rank, and they look undervalued based on almost any way you can look at it. The PE ratio is among the lowest in this company's history. Same with the forward PE ratio. And even looking at things like price to book and price to sales, this company is trading below what it normally trades at. And we can take a look at the revenue and the incomes. Very clean, very nice increase year over year for both revenue and net income. And then coming down here, we also have the operating cash flow. So this is just the operating cash flow. I'd rather look at cash flow than earnings for reasons I've talked about in the past. And so that is also a good sign to see this going up continuously as well. So we can come over to the discounted cash flow calculator and now really start to see what this company is worth. So we're going to value this company based on its free cash flow. This website uses a 12% discount rate, and I think this is a little high, so we can lower it to 10. I think that is more of a fair discount rate, sort of setting it equal to the average return of the stock market. And I'll also add tangible book value because that plays into the value of the company. And then we have for the next 10 years growing at 5%, and then for years 10 to 20, it's growing at 4%. And based on that, you get a price of $471.30, which does suggest that this company has a 40% margin of safety. And so that is very good, and I think this number is pretty accurate. Based on what I've seen, it does seem like this company should be worth at least $450 a share, where right now they are trading at well below that price. Right now they're trading at only $277. Now there is only one concern with this company, and that is for the future growth. It is projected to slow down. So if you look at earnings per share over the past 5 years, they were growing at a 20% growth rate. But if you look at what it's projected to be over the next 5 years, it's actually projected to be negative. So earnings have been growing extremely fast in the past, but now they're starting to slow, and we're actually expected to see a decrease over the next 5 years. And this sort of plays back into what I said with these drug manufacturing pharmaceutical companies. They need to be continuously making new drugs in order to keep those earnings and cash flows coming in. Because without frequently coming out with new products, their old drugs are going to go off their patent, and eventually the revenue from those will dry out. And so that might be a part of the reason why this company appears to be undervalued. If you look at the stock price, this stock's really been trading in a range, consolidation, since almost 2014. It's really stayed around this range between around $250 and $350. And that could be the market waiting to see this company actually come out with new drugs before they let the company get up to what it should really be valued at. So that's the main risk I see with this company. In terms of if I'm going to buy this company or not, I have my eye on it, but realistically, I don't see myself buying this company because I really don't understand the pharmaceutical sector, and I just don't like the industry in general, where the business model is dependent on pouring billions of dollars into research and development every year in the hope that you find some brand new drug that will cure the next disease. I think in this industry, as much as any, company success is due to a factor of random outcomes, where the difference between a company thriving and a company struggling is approval from the FDA. And along with that, pharmaceutical companies are definitely not within my circle of competence. I read through the whole annual report, and at times I did not understand a single thing that was being talked about in some of those sections in the annual report. And so I don't really feel like spending an extended period of time going into this industry and this company in particular to really dig deep down and learn about what their real strengths are and how good of a chance they have at actually developing these new drugs compared to their competitors. So for that reason, I most likely won't be buying this company. But they do look undervalued, and I would not be surprised at all if they do go up 50% or more in a relatively short amount of time. So that's all I really have to say for this video. Continuation of the last video, showing how I find stocks with Joel Greenblatt's Magic Formula stock screener, and then some extra steps I take after the stocks show up on the screener to do some additional research to see if these stocks are actually worthy of being added to my portfolio. If you found something of value from this video, be sure to hit the like button, as it helps out my channel a ton. And if you're new to the channel, subscribe right now and hit the bell icon so you get notified whenever I upload a new video. So that's it for now, and I'll see you next time.